Good morning. Welcome back to Forex Focus here on Tasty Live. I'm Glenn Freiberger. Join with me, Mike Henley. Mike, it's July 1st. How we doing?
Doing great. Got to work super fast this morning. Markets are moving as well, so interesting start to the month already. 6 hours in.
You're learning the Pete Mulmat strategy now of no traffic, how to beat traffic. You just get here at 5 a.m. And yeah, shocker, not as many people on the road. I personally don't think I could get up that early. That guy slams 2 cups of coffee before 4. But hey, if that works for you, welcome aboard. It's a short week here for Tasty Live. You got any holiday plans coming up?
Probably just taking it easy with the family, looking at markets, catching up with everything still. Not really any days off for me, but we'll enjoy some time with the family.
All right. You work harder than I do. I'll be off tomorrow.
There we go.
And Thursday going up to Minnesota. Got a bunch of friends at one of my friends' lake houses.
Okay.
Should be pretty good. I'm a little scared because I've gone there the past few years. My friend has a very nice house. It's a ton of fun, but this year he invited 30 people to stay there. So we're going to see how that shakes out. He claims everyone has a bed. We'll see. I know there are a lot of rooms, but that seems aggressive. But it'll be fun nevertheless. But before then, we're still here, you and I, here in Chicago, and here we are jumping into the tastyfx platform. Early this morning, we saw some interesting... Our good friend Pete loves to talk about month-end flows. Yesterday, we saw a little bit of some perhaps more organic price ranges, but we just saw more of the same Kel-Surprise dollar weakness. And here we are staring at us is this 118 spot euro dollar price. That is an interesting one to wake up to. How do you interpret this this morning's market?
Yeah, if you want to pull up the chart really quick, there hasn't been any weakness, and I want to say there hasn't been any weakness for quite a while, ever since even before the tariff announcement in early April. We can go back to all the way mid-January, I believe, is probably the low of the year there. Yep, right around mid-January there. So we moved, this is slightly under almost a 20% move in euro dollar in the past 6 months, which is a big move. I want to say it's highest price in multiple years, right? We got to go back to either 21 or 22 to see back time. Yeah,
you nailed
September 2021 there. So does this have legs for 120 plus is the question. Do we start to see a pullback back to our regular moving averages, or is this the top here and we get a sharp reversal to the downside? Right now, price action doesn't show any weakness, right? Because we did have, I want to say, back next month where we have that 115 to 110, slightly above that drop there in the chart. So do we see another one of those? Or is this just continue straight up 120 and 125 is the next stop, 130 there? Really interesting move to see. Is there more legs to it? Maybe. But yeah, right now, no weakness in terms of price action there.
Yeah, a wild rip to the upside, but we have seen this before, some historic context, not since 2021, but we're staring at this psychologically key level of 120, but it does look like the last time we were here in 2021, we did see some support and or resistance to the upside here around 119, 118 perhaps, and it looks like we've tested it already early this morning, but for a stretch there in 2021, getting as high as 123.5. So definitely some historic precedent, but this thing has been unrelenting. Looks like we've tested the highs for the day, rallying from the UK Open, first few hours of that market open, getting as high as 118.30. now still sitting above 118. But when you go to the daily chart, I mean, now you'd have to look back to April still to really get some of those successive US dollar down days in this market. Just a runaway from when we came all the way back under 112. Really few and far between dollar pullbacks here. Super interesting market, but not our mover of the day, actually. We have this dollar yen market that is down 0.8% from yesterday's close, in quotations, because these markets don't actually close during the week, but just as a benchmark for net change, some price history, we're down almost 100 pips on since midnight here. We pull up the hourly chart. This has been similarly a runaway against the dollar, all the way from highs. That's only last Monday, that we were up at 148, and now down to the tune of 3.5%. Now just crossing this 143 level. Is this 143 level interesting to you at all, Mike?
Yeah, because if you want to pull up that daily or weekly chart again, just to get a deeper perspective, right now we're sitting at that bottom of the range we've been ever since April. I know we slipped under that briefly when during late April when everyone was moving around with all the tariff talk there. So do we see a breakdown off of this 142, 148 range, or is this bottom here? Then we start to bounce back to 148 and maybe see some dollar upside again. You pull up any currency pair that we have, you're just seeing dollar weakness across the board for the most part. Another one that's pretty interesting is USD CHF, the Swiss franc there. That one has just been no sign of weakness at all. There hasn't really been a range to it either. It's just been straight down and to the right ever since that mid-January level too. So it's pretty interesting to see, no matter which market you're in right now, if it's crossed with the dollar, you're seeing weakness all across the board in terms of the dollar side of things.
But what you are getting time and time again through this months now of dollar weakness is when you're looking at these spot FX markets, you're getting a lot of unique price points and a lot of unique charts, because here, just through the three pairs we were comparing, here the US dollar versus the Swiss franc, now we're trading, this is the daily chart, now we're trading at really what's effectively a 14-year extreme. We briefly shot down below it on this Euro DPEG in 2015, but no daily closes below this 0.8 handle since August of 2011. And so really uncharted territory here. If you're looking for price extremes, you have it in this strong Swiss franc. And on the other hand, we go back to this dollar yen market, which in weeks prior, when we're pulling this up, comparing it to a euro dollar to the Swiss franc, this one has been kind of in the middle of its range, saying, of course, this dollar keeps getting weaker, but at least this pair is in the middle of its range. Not sure if it will continue up or down. Now we're getting in this pair back to the bottom of this 2-3 months trading range under this 143. So is there historic context to go lower? Absolutely. I mean, but not prior to, this is farther back than I would have thought, not prior to 2023 have we really sustained prices around 140, but before then, all the way down to 130. So a lot of different price points for you if you're looking to get engaged in these dollar markets. But I mean, we've got US dollar, Canadian dollar, unch on the day. That one we thought maybe would be interesting with the backdrop of the trade deal, no deal of the buzzer beater of last week. That not looking to be anything except you could argue that this one holding in a lot better. US dollar is against the Canadian dollar, but this one also near its bottom of its trading range. Anything interesting in this Canadian dollar piece?
That move on Friday was interesting for about 15 minutes or so until it just reverted back in the market. And then you saw over this weekend, sometime on Saturday or Sunday, it looks like trade talks are back on and they're yanking off the tech tariffs or whatever Canada was doing on that side of things. So that's pretty interesting there. On the USD JPY side of things, if you want to go to the monthly chart there really quick, because what I find most interesting is you look at kind of that 2020 up move all the way to 2025. It's a almost 60% move in a currency, right, from the low to the high there. So when you see this downside there on USD JPY, when you're comparing to the other downsides on Euro, USD, Aussie, CAD, Swiss franc there, we've had such an outsized move on this particular currency pair that sure, maybe you're seeing a little weaker downside, but it's kind of a completely different chart than all of those, right? Because during that 2021 to 2003 craziness period, when stocks and equities and bonds were collapsing there, when rates were rising, right, we saw this pair rip, and sure, other pairs ripped too. Euro got below parity, but this was just an outsized move to me. So it'll be interesting to see how this plays out in the future as well in the long term.
Yeah, and if you think that right now dollar weakness is coming at you faster than it has historically, look no further than this 2022 dollar yen market, where we went from under 120, around 115, all the way to above 150 in the span of 7 or so months. And so, I mean, really, have we done as much damage? Not even close.
Exactly.
To the tune of, what is that, 1,000 pips so far. But this market, as you say, has been run away before. Looking at some other interesting spaces here this morning, for me, verifying, we have widespread dollar weakness, but this yen is an outperformer. So checking one of the crosses, euro yen, one of the most traded non-dollar crosses in the world, usually fairly liquid, is now similarly coming off to the tune of 0.5% here. Not as great as this dollar yen move, but here we have another example of a unique chart where we're coming off of price extremes dating back to 2024, off of this rejected pretty hard, just under 170 here. So if you're not looking for a dollar component, this also an interesting way to play the Japanese yen market. But that's here looking at the economic calendar for today, what we've got coming up. Today we've got, if you're sleeping in, not catching this live, you still have some time because we have Jolt's job openings at 9. Is that 9 Eastern?
No, that would be at 9 p.m. Central Standard Time, should be 8 p.m. Eastern, I want to say there. I know we got Powell talking right before that, Lagarde speaking, a couple other central bank speakers today there. And we got manufacturing PMIs as well, so that all that data should be pretty interesting across the board on what those central bankers have to say as well. Light week on the kind of data side of things, but today is pretty interesting if you want to scroll up a little bit more on that. Just this morning we had some euro data as well, with inflation coming in line with forecasts. We saw a little bit of an acceleration month over month. But when you're looking at that previous rate, 1.9% to 2% uptick, much better than the U.S. right now, right? We're sitting a little bit above that there. So does this maybe play into the price action and what we see with all the strength, right? Because we have one of the highest real rates in the world right now, right? But just the currency price action across the board this whole year has been weak in general. And historically, you see when a country has high rates, right, their currency is pretty strong compared to others with a central bank that has lower rates. But right now, is that playing a factor at all in the market, or are we just seeing other factors come in and tariff and really acceleration of growth in GDP, do those things matter more? Plus, I guess you could say unemployment, because the U.S. data, we haven't really seen extreme weakness across the board in terms of employment, payrolls, really anything like that. So
We'll
really,
see.
is interest rates the biggest factor here, or does that not matter at all anymore?
We'll see. This morning we'll get a good indication on how much gravity this employment data will have ahead of non-farm payrolls on Thursday instead of Friday this month, given the U.S. holiday on Friday. But a lot of interesting factors in this euro-dollar market. So we've got a segment prepared for you if we want to flip over to the slides on this euro-dollar piece, because we are at extremes, and begs the question, what are some of the best Euro USD strategies after extreme weekly moves? A little research piece for you guys here. What we did, we just covered a little bit of the background, but euro dollar screaming higher. I mean, this chart, which I put together last night, is now outdated, as we have not only hit new highs above 117, we're now through 118 pre-market here today, and kind of analyzing what this market has done over what time periods. Last week we saw a move, a very fat candle on the weekly chart of over 2%. Already on Tuesday, it appears, I think we're close to 1%, if we haven't already beat that. And U.S. dollar pullbacks have not been perhaps what they were when we were closer to parity. Dollar not holding in to any momentum here. And again, the backdrop of FX markets over the long term, as opposed to the equity market or various equity indices that tend to have positive drift over time. FX markets tend to be historically more mean reverting. That doesn't have any, past performance doesn't have any indication of future results, but it is important context when you're trying to develop your trade strategy. So what we did is we took the last 6 years of price action in euro dollar daily closes, looked at 7-day trading periods to try and see what this past week's 2% move meant contextualized over this range. We analyzed data filtering for 1% moves, 2% moves, 3% moves, and what we spit out for you was average return on those the next 7 days when filtering from the past 7 days, what your returns would be, as well as a win rate of sorts for occurrences, higher or lower, from whether you took a contrarian stance or a trend following position. So what do we got here? We've got when the euro dollar is trending higher, which is what we're seeing, the backdrop we currently have, the landscape. We have up 1%, not so interesting from an average return. Up 2%, the next 7 days will yield a slight pullback on average, and up 3%, we do get almost a full percent of pullback. But what's really interesting to me is breaking down this kind of win rate, continuation higher versus reversing lower. You see the slight edge for mean reverting strategies, where 54% of occurrences reverse lower, whether it's up 1% or 2% over the past week. But then a very interesting wrinkle for when this market is really trending higher, tends to continue trending higher from an overall occurrence standpoint. Anything on this graph stand out to you, Mike?
Maybe if you were to go back and individually look at every single one of these up 1%, up 2% moves, maybe those are things happening in the market where the market is able to digest, and not necessarily shrug off what happened, but maybe priced it in at a more efficient rate than those 3% moves, right? Because 3% move in a currency pair is a very, very large move. I mean, so is 1 and 2%, right? But 3% is a very outsized move. So is that something groundbreakingly changing when a 3% move happens in a currency pair? And does that carry more weight than just continuous up 1%, right? Is that something fundamentally changing in the market would be my question to that.
Yeah, it's a good question. But what's really interesting to me is we've also cut this into when Euro USD is trending lower, which, excuse me, you'd think maybe it's the same up or down, but we did get some interesting data here. When this market is trending down over the past 7 days, mean reversion strategies demonstrate a much clearer advantage than when it's trending higher, and that is actually exacerbated on those 3% moves as opposed to those trending higher. Here we've got average returns are higher for a bounce back when the market is lower and it's down 3%. You're getting a bounce back of over 1% on those 3% moves, and the win rate for reversing higher, categorically higher for 2% at 65 to 35%, and then 3%, it's split three out of every 4 occurrences results in a bounce back. Anything here?
That's pretty interesting because I would say when you're looking at the pair Euro USD, right, you're looking at kind of risk on, risk off in a sense. And when you see downside moves, which means the US dollar is strengthening, right, that usually means there's some sort of fear in the market for some reason. And not necessarily surprising to me with this current state of things, right? Because when you're looking at the stock market these past couple months, when there's a brief moment of fear off a Trump tweet or something like that, instantly gets bought up, right? So this data kind of mimics that again. Past performance not indicative of future results, but it's pretty interesting and kind of lines up with that same thought there, where weakness gets bought up right away, right? But not necessarily strength gets bought up right away in terms of risk on, risk off.
Yeah, that's a very important lens, I think, that does play into this on that kind of risk-off sentiment in terms of number of occurrences. But our key takeaways here, definitely some interesting insight that using 1 week trading periods, mean reversion strategies do have a slight edge over trend followers, both in average return and in that kind of win rate, but much stronger after down moves in this euro dollar market as opposed to when the market is trending higher like we currently have. So we tend to see much stronger bounce backs than perhaps what would you call that? Fallbacks in a trending higher market, which anecdotally is what we're seeing right now. Not a lot of US dollar pullbacks in this market. But one thing I definitely want to call out is that taking this contrarian stance, trade entry might be a lot harder to gauge using this 1 week trading periods because as we saw from average returns, those profit-taking targets should be a lot more conservative because just going back, if you're getting a down move, if you're registering a down move of 1%, your bounce back historically is only an average of 0.13%. And so that would mean you would have to really pin the low there to get any sort of thing out of there. Maybe that gets a little easier when it's down 2%. You have a little more room to run. But what does that mean for trade entry when you're looking at down 1%? Are you waiting for down 2%, down 3%, or getting in right away? And so definitely perhaps harder to pin that low or that high and when taking a contrarian stance. Luckily with SpotFX layering into positions from a trade sizing perspective, perhaps a little easier to layer in taking those mean reverting strategies. But that's all we got for you on euro dollar strategies from what we're seeing in a pretty crazy euro dollar market, pretty crazy dollar markets all around. So that's all we got for you here today on Forex Focus, but not all today from Tasty Live. So don't go anywhere. We'll be right back on Tasty Live.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.